All the news is bad. War in Ukraine, inflation, food shortages, real estate markets slowing down. It's all just so depressing. But take heart, my friends. When the news is bad and the faint of heart stick their collective heads in the ground, the rich and entrepreneurial smell opportunity. That's right. There's money to be made in good markets, but also in down markets. You just have to be smart about it. In this podcast, David and I talk about how to evaluate the land market to find the hidden gems.
If there's one thing I've learned in my business career, it's that I don't have all the answers. Look, I'm an ambitious guy, and I like to make progress fast. The secret to achieving success fast is to harness the brain power of other people in the community. That's what the Land.MBA Smart Bar is all about. As veteran investor Jesse Marchand said, "The Smart Bar gave me the motivation and knowledge I needed to push through the tough times and accelerate my path to success." Seven-figure investor Mitch Milan likes to say, "There's one meeting each week that I never miss. It's the Land.MBA Smart Bar. It's like happy hour with my land investing buddies. I always learn something." So if you want to network with like-minded people, make new friends, learn heaps, get questions answered, answer questions for others, learn new strategies, get accountability, and overall get inspired while having a great time, check out the Land.MBA Smart Bar. For a short time, podcast listeners can get 20% off the annual plan, which comes to an insane $86 per month. Compare this to other programs which charge $250 a month or more. This is hands down the best deal you're going to find and the best way to invest in your success. So don't wait. Please go to land.mba/mastermind. That's land.mba/mastermind and use promo code podcast22 to join today.
Hello, all you gorgeous entrepreneurial land baron entrepreneurs. This is Howard Zonder with my partner David Van Steenkiss, and you are on the Land.MBA podcast. We hope that you enjoy the content we're offering you every week, and you will honor us by liking, subscribing, and hopefully commenting on the podcast. And I know I say that every week, and I know that every podcast says that every week, and I know that nobody really does it. But if you could do it, it would really help. We would be so appreciative. So, what are we going to talk about today? I think it goes without saying that we are in, shall we say, unprecedented times. And it's probably not true because it's probably happened a lot of times in history. But the world is really in a transitional moment, and what we're all trying to do is figure out, what does this mean for us, because that's all anybody cares about anything is, what does this mean for me? And we're going to talk about that today, and about the current state of the economy and what it means for land investors. But I want to just introduce it with this idea. Even when we get into times of great transition, such as recessions, depressions, world wars, and things like that, there are opportunities, and some tremendous opportunities, for the aspiring entrepreneur who is determined to succeed no matter what the world throws at them. Remember, in the game of life, it's not about the hand you're dealt, it's about how well you play it. So let me talk for a moment about this guy named Aristotle Onassis. You might have heard of him. He was a shipping magnate. He was also the husband of Jackie Onassis after John F. Kennedy died. Well, when he got started in his career, he was born in Greece, of course, and he ended up in Argentina. This was in the 1930s. And he got a job in working for the stock exchange in Argentina. But he didn't have like a job trading on the floor or anything. He was an operator. So he was an operator back in the days when they said connected the calls. It was like Mabel, the operator, takes the patch cord and plugs it over there so he can connect the call. But the thing that R.A. Onassis did is he listened in on the calls. And he became aware that war was coming. And he understood that war was going to create tremendous opportunities. And so he started, his father, who was a rich guy, was transferring a ton of money other people's money over to Argentina to be invested in a certain way. And in Ari, one of the things Ari was also doing outside of being an operator was his job was to make sure that money got to its destination so it could be invested according to the agreement with the people who provided the money. What he did is he took that money and he bought a boat. You might call it a ship. He bought a ship, an old cruise liner ship that could be converted into a warship. And he did that and somehow managed to get to sell it, get the money out, get the money transferred over to the people before anybody figured out what he did with it, and then take this nest egg that he built, and he built a shipping industry of warships in preparation for World War II, and that's how he made his fortune. So intelligence, and I don't just mean mind intelligence, I mean access to good information, preferably before everybody else has it, is one of the strongest assets that we can have and play upon in order to be successful. So, with that sort of metaphor and that foundation, today, what we'd like to talk to you about is okay, let's just say that we are going into recession, as most people think. Many people think we're already there. And we know that in recessions, bubbles burst and markets go down, but that doesn't mean that there's not opportunity. So, how do we find the good opportunity, just the way Aristotle and Onassis found good opportunities in a transitioning world? What do you think, Dave?
I think you're absolutely right. You know, the sky is not falling. You know, we're going to go into something that we've been through before. We know that we'll always come out of it, but having the right intel will enable us to make certain shifts in our business. And I think we do need to start thinking about shifting. You know, we can talk about various strategies and what we're going to shift to. And you always, in these strategies, you want to begin with the end in mind, always, and then work backwards and say, what's going to work. Can I still keep chasing up and increasing my offers to get more deals because I know I'm going to sell them as soon as I get them? Can I still keep doing desert squares and buying properties where there's a lot of inventory and a lot of competition and still be able to sell them in a reasonable amount of time during recession? Those things might need to shift, So we want to go where the opportunities will be the easiest. That's researching which geographies, because we know that real estate is micro. We have to somewhat attach land to the housing market. So we want to look at certain geographies based on our strategies, and then we want to target buyers. We want to create a buyers list of certain targets. For example, off-gridders, homesteaders, infill lots for developers, and that's going to be certain markets, very specifically with infill lots. So why don't you tell us a little bit about what you think on targeting the geography, Howard?
Yeah, I think you're absolutely right. I mean, when the market's rising and the ocean's rising, all ships go up with it, to continue with the metaphor. And the strategy is, okay, just move as quickly as you can. Just buy them and sell them as quickly as you can. When the market starts flattening or potentially turning down, now we have to be smarter about it. We have to be wiser in selecting our opportunities, because there's the potential that the value of our property could decrease over time instead of increasing over time. But the reality is, and it doesn't matter what market you look at in history, even if the aggregate market is going down, there are always pockets that continue to go up. That was true in 2008. That was true in the early 1980s, or the early 1990s, every recession that we've had. So it means that we have to be a little bit smarter, and we have to put a little bit more effort in on the front end, on the strategy side, to make sure we're going after the markets that continue to do well, even when on the larger side things are going down. And two good ways to look at that is segmenting the market geographically or segmenting it by target audience. As the saying goes, start with the end in mind and work backwards. Um, so with geography, I think that means you've got to be able to access the right information to not just see what's going on in a snapshot in time, but to be able to analyze trend analysis in markets. So what we want to know is not how is the market doing at this moment, but how is the market trending over the last 6 to 12 months and possibly longer than that. You might even want to go 36 months just so that you understand if there's a seasonality to the market, right? It may be that every time springtime happens, the market goes up. So you want to be able to understand if that's happening today, that it's not an anomaly. You want to say something, Dave? And while seasonality is an important thing to understand, there may be short-term changes that are more important. But you just do want to know that if something's going up or something's going down, is it, you want to be able to determine, is it because of the seasonality or is it because the market in fact is changing? Is something happening at a greater scale or degree than it's happened in the past? That would be interesting information.
Yeah, excellent point. I mean, the short-term data, forward-looking, looking at the leading indicators. Well, short-term lagging indicators, like I'm seeing market changes over the last couple of months. If you in housing inventory, I've got a couple of counties that I work in with land where the less desirable land is definitely slowed down along with houses over the last couple of months, and it's been very abrupt. And so I'm watching the trend moving forward. And then, but I mean, good, nice, desirable properties are still selling decently quickly. But you also want to take into some other, macroeconomic factors, like where there's potential job losses and things like that in those areas, and you don't want to wait until after those big layoffs have happened. You want to look at leading indicators. You want to look at sectors as if you were analyzing stocks. Sectors like the tech sector is pretty vulnerable right now, and other sectors. So you want to look at those sectors, and then where might those sectors have a lot of jobs and high risk of layoff. So
Yeah, totally right. You had turned me on to this video a long time ago, and I thought it was kind of brilliant, where the guy was saying that one of the leading indicators was the number of permits for new construction. And they knew that during COVID, because of supply chain issues, the time from permit to being able to sell a house was extending to, say, from 1 year to 2 years. And so they were predicting when all this inventory was going to come on the market based upon those permits. And now you can kind of look at, okay, what's the demand, what's happening in the demand side of things that you hear from realtors versus what's the supply issue, and that's a big input to supply. So you can look at these different data points in land as well, to sort of understand what's going on. Um, and as they say, all real estate is local, and it's all about location. So
mhm.
even if as a nation or as a world, people are starting to feel more financially insecure, whether it's true or not. How people feel is what drives the economy. If their 401ks just lost 30% because the stock market is declining so fast, they don't feel as wealthy, and they're going to be tighter with their spend. That's just reality. That's how the world works. But that's not true universally. So, for example, the reason people have been leaving New York City has not changed. The defund the police movement, the letting all the criminals out of jails has created just a crime-ridden city, even in more storied places like the Upper West Side or the Upper East Side, or in parts of the Bronx that were actually kind of nice. And so a lot of people are moving for that. The city centers are not the great hubs of culture and restaurants that they used to be, so people are not getting all the advantages. And if we layer on top of that the potential of job losses from recession, what is going to be the motivation for people to stay in New York City, where they get the opportunity to pay not only federal taxes, not only state taxes, but they get to pay local taxes, their city taxes as well.
Yep.
And so the result of all that is that even while there may be a massive slowdown nationally in real estate, where I am in Fairfield County, Connecticut, boom, it's still hot as hell because all of these people are migrating out. And that's why it's about location, because each area has its own unique attributes. Same thing for land. So Dave, you were telling me earlier just about the big cities, such as the hot cities like Austin and Dallas and Denver, and so talk a little bit more about that and what you think is going to happen to those cities and what implication it could potentially have to the exurbs, the sort of the 90 minutes out from those city centers.
Yeah, well, the adage goes, what goes up must come down. And there's some people that I follow that they're talking about comparing the massive exponential trajectory in housing prices, particularly as a result of the pandemic in the last 2 years, and lack of supply. So you had all these bidding wars and everything, and you had certain geographies where a lot of people were moving in, and that compounded the demand with the low supply. And now that we've got the certain conditions on the ground, what I understand is that the markets that were hottest and had the big exponential massive rise and increase over and above affordability, over and above job growth and wage growth, those are going to be the markets that are hardest hit with regards to the real estate prices, particularly housing. Now, land is a little bit more protected in that we didn't have cheap interest rates fueling land prices, and land prices, except for some pockets, didn't really appreciate a lot. It's just kind of a steady eddy because a lot of cash deals and seller financing and whatnot. So, it remains to be seen. But nonetheless, we're gonna have less buyers in the market, so we've got to be more targeted and target those right buyers. And you might want to avoid the areas around the hottest cities, the Denvers, the Dallas, the Austins. You may want to avoid those areas. But again, it's very micro. You could have a result in these areas where 90 minutes, 120 minutes, 2.5 hours out. The world has changed since the last recession a lot, with much better technology for rural living. You've got in some areas now, you've got Starlink internet available, and normal internet services are out much further. Now you've got much better solar technology and things, and since the pandemic, we've seen land sales go on steroids the last couple of years, and because people really want to get the hell out of the big cities. So I could be totally wrong on that. I think we just need to analyze the data and also make sure we're buying right. I think we can't keep chasing values to get deals. We need to stay disciplined on our offer prices to protect ourselves. So I think that's enough about geography. Let's talk a little bit about our target buyers. I mean, off-gridders, homesteaders, etc. Even in some lots, you might do infill lots, cabin lots. But let's you want to find a good data source to source these buyers. You want to build a buyers list and everything. But some of the attributes of the you want to talk about the attributes of the locations there, Howard, and the buyers.
So,
The target buyers.
I think what we want to do is you always want to start with the end in mind. And again, when the market's hot, just buy it as quickly as you can and just put it out there. Someone's going to buy it, and just turn that crank and make hay while the sun shines, as they say. But when things are slowing down, you want to be more targeted. And so it's a lot easier, I think. So our challenge, while we always want to buy well and buy low, our challenge is to sell fast. That's going to be the harder part in this kind of a market. And the way we can continue to do that, because at heart we are flippers, is to find target customer bases that are going to continue to be active in the market and sell to them where they want. And so it's easier to do that if we can segment the market. And so we can do that by looking at different kinds of buying audiences, whether they're off-gridders or homesteaders or developers of infill lots or people wanting recreation or cabin lots, whatever it is. Create your persona, figure out what it is they want and where they want it, and then go source it so that you are basically sourcing for a market that continues to be active even as the greater economy slows down. So let's just use one example. So let's use off-gridders. And the nice thing about off-gridders is there's a lot of information about who they are and what they care about and what they're looking for in terms of land. So, for example, what are the kind of attributes that Dave, that you think an off-gridder would be interested in when buying a piece of land?
Well, they're going to want low restrictions, not overly expensive. And there's variations within the off-grid / homestead
Let,
people.
let's take them slow. Let's take that low restrictions one here for a moment
All
because
right.
it's a great one. So, for example, one of the states we want to look at if we're going to go after off-gridders is probably going to be Arizona. And one of the reasons we like Arizona is because it's got relatively low restrictions when you want to go build. They're not going to, and it's really interesting when you compare that with one state over, Colorado. Colorado has really high restrictions. So anybody in this game who has done business in Costilla County will probably recognize this, but so many people want to buy land in Costilla because they think they can go in there and live off the grid. And at a county level, let alone at a state level, it's very unfriendly to off-gridders. Oh, I'm sorry, you're going to need a permit and you're going to need to put in a septic system and you're going to have to if you're going to build something, it's going to have to be of a certain size and you're only going to be allowed to pull enough water out of the ground to support your indoor activities, but not enough to farm. So for all of these reasons, it's very unfriendly to off-gridders, whereas Arizona has many fewer restrictions, and what you want to do as an off-gridder will probably be okay. So by understanding your target market, it helps you figure out where to target your land purchases to support them.
Right. Exactly. Yeah. And then, we've got other, low property taxes, I think, are a key. Gun friendly, so that you're able to hunt and defend yourself. If you're living off grid, you're not going to be relying on first responders. You're the first responder.
Exactly.
And areas that allow you to collect rainwater, very important. Unless you find a property that's good, you can put a well in and whatnot. Yeah, rainwater collection. It's amazing to me how many places actually don't allow that. Colorado's another one that the vast majority of the counties don't allow it. How they police it, I couldn't tell you, but also, I think there's you got to kind of figure out what the price ranges need to be, but certainly not overly expensive land, but certainly not desert squares either, because there's no resources on those properties. Yeah. So, and we've got to cut, like we identified 3 states that exhibit a lot of these attributes. There's many more, but we just kind of picked 3 out of a list. So, for example, Alabama has low taxes, lots of water, and is gun friendly. Arkansas, you got rolling hills and rich farmland and water, and lots of inexpensive land there. Arizona, as Howard already pointed to, for low building requirements in most counties, and is probably the most gun friendly state in the country. Now, not every county has good water, so you gotta pick the county where you can get water. Although most of them you can get delivery. And then finally, I guess there are some beyond our normal quick flipping. When times are changing, those who find niches, we know the niches are in the riches. We got to get creative sometimes.
think it's the other way
And
around. The riches are in the niches.
the riches are in the, yeah, did I say it backwards? The riches are in the niches. Thank you. But there's a lot of synergistic opportunities to what we do, that maybe instead of flipping some of this land, or if you get in a point where you have a piece of land that maybe is sitting and not selling, there are things that we can do with it. For example, tiny home / alternative housing communities. Go in and put, those are becoming very, very popular. And I think, there's going to be people impacted that are going to need cheaper housing. They're going to want to get out of the city and maybe live in a tiny home or something like that. Then there's also, for those people who do have some money, glamping and Airbnb. You got a nice property. There's definitely, I've definitely sold land in the past where I just wanted the quick cash, but some properties that I had wished that I would kept to do that with. And then, of course, something that a lot of people overlook, and that's hunting leases. And there's some online websites that you can go and get information on with those. But I remember a few years ago, there was a piece of property I had in Southern Colorado, a 40-acre parcel that was in a nice hunting area. And I mean, I ended up selling it, but when I did the research, I found out that I could lease it for about $300 an acre, which would be 12 grand per year, which was about double what I was getting on terms payments. And I got to keep the asset. So
Yeah.
something to think about for sure.
Absolutely. Like we said earlier, land investors are primarily flippers. Our goal is to get in and out as quickly as possible, take those profits, reinvest them, velocity of money, turn it over as many times per year as we can. But in a challenging economic time, I think what we also want to do is we want to de-risk our business as much as we can. And there's two things we've talked about in this podcast to that effect. One is to do really good front end research and understand where you're going to buy and what kind of land you're going to buy, either based on geographic trends or on understanding a particular customer target market. But the other thing is in what the big guys are going to be doing, the Robert Kiyosaki's of the world and whatnot, is they understand is this is a good time to be in cash because as the market declines, to the best of your ability, you're going to try to track the bottom. Now, nobody actually gets the exact bottom, but so long as you're towards the bottom, whether it's still on the downward trend or the upward trend, eventually it's going to hit that upward trend. You're buying low, you hold it, and then when it goes up, you can actually sell it for a substantial profit. That's not necessarily our business. We don't all necessarily have the capital to sit on things. But it would be nice as a backup plan to know that if you have a property, as Dave said, that's not moving as quickly as you need it to, how can you cash flow that property today by doing something out of the box with it, putting a tiny home on it, put a yurt on it, lease it out for hunting land, just all those things that Dave just talked about, make an outstanding backup plan so that you're not caught suddenly owning a piece of land that's costing you money and not delivering any value to you.
Absolutely. Well, good. I have no more to say on that issue.
All right, Forrest Gump. That's all I got to say about that.
Right.
I always thought you did remind me of somebody. Now I know who it is, Forrest.
Must be the hair.
Well, everybody, thank you so much for joining us today on our podcast. We hope we have given you a few things to think about and to prepare for, because as we like to say, there's whether the market's going up, or the market's going down, there's always money to be made. You just got to be smart about it. So,
well, yeah, like Warren Buffett says, when there's blood in the streets, buy.
Exactly. So, thank you all. Have a wonderful week, and we will see you next week on the Land.MBA podcast.
All right.
We hope you enjoyed this episode, had a bit of fun, and walked away with some actionable insights that you can apply to your business. Dave and I have got some great content and interviews planned, so don't forget to rate and review, and of course subscribe to this podcast on iTunes, Google Play, Stitcher, or wherever you get your podcasts. If we mention any interesting links or tools, you'll find them in the show notes. To learn more about Land.MBA, visit our website at, wait for it, Land.MBA. See you next time on the Land.MBA podcast.